Thanks for having me.
And for more on Hugh's coverage of Morgan Stanley, you can go to CNBC.com. Global uncertainty is one of the reasons Moody's is out with a warning on banks today. The firm cutting its global banking outlook for next year from negative to stable. It cites a slowdown in long-term economic growth, low interest rates, and geopolitical uncertainty related to the trade war, among other things. Here now is Andrea Usai. He's Associate Managing Director at Moody's. Andrea, welcome. Good to have you with us.
Hello.
Are most of these problems that you see or have identified in the global banking system outside of the United States, or are many of them located here too?
Yes, absolutely. So the global outlook refers effectively to, it reflects our view of the global banking sector. And as you said, we changed it to negative from stable previously. But if you look actually at different regions, there are mixed, the picture is mixed. So for example, for US banks, our outlook remains stable for next year.
Do you think the outcome of the UK election, Andrea, on Thursday could have implications for Brexit and therefore some of the European financials?
Yes, absolutely. The effectively geopolitical risk and domestic political risk, as well as trade tension, is obviously one of the big sources of uncertainties for the banks that we have highlighted and incorporated in our negative outlook for global banks for next year.
How much of the problem that you see in these global banks traces to macroeconomic factors on the one hand, and then on the other to the idea that maybe some of those banks in some countries were not regulated as staunchly as they were here in the United States, that they haven't taken some of the cleanup steps that were taken here to put American banks on firmer footing? Tell me about that.
Yeah, they are both equally important. Obviously, the slowdown in long-term trend of growth is obviously a big centerpiece of our global outlook. Certainly, for U.S. banks, they're actually facing some of these pressures from a very, very strong position. In other countries, if you look in other countries, the situation is very different. If you look, for example, at Europe, there remain a number of challenges, mostly due to slower economic growth, but also lower interest rate for a much longer period of time than in the US.
Andrea, your reaction to this news just hitting the wires that Hugh Sun laid out for us, that Morgan Stanley is making cuts to its workforce?
It actually fits perfectly with our assessment of the profitability of US banks. We think that profitability will continue to be challenged by the declining interest rates, but banks have levers that they can actually pull to mitigate these pressures, and cutting costs is one of them.